Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps that were in play today. So yeah, these were many of the top winners today, and so Seadrill followed through big time. This is a stock that we had been following in our chat, and so it was a nice follow through today. Congrats everybody, did close up 26%. Has RSI 84. Fasto there, you can see it cross back over below that red line there and below 80. That was the sell signal. If you look down here in accumulation distribution, you can see the spike down on accumulation distribution and the spike down in shaken money flow. When you have a giant volume spike like today in the share price that's up 26% on the day, there should be a spike up on both of these indicators, and so that's a signal that they were selling shares. You can see here there's a long upper wick on today's candle. That's a sign of dilution. There was a gap up open today. There's a space between high of day yesterday and low of day today. So if the candles do work their way back into the bands, look for that gap to fill. A drop down to EMA4 at 462 is possible. That's the first moving average support level. You want to see the candle stay above that 300-day simple moving average at 415. Now to head higher, it needs to break above this high, the high from back here in September, which is right around 6250. If it can bust out above that level, then it could keep pushing higher. It just with a multi-day run and then a big what looks like climax spike, and then the gap up open, and then today's candle's floating above the upper Bollinger Band with not much room to run on RSI. It just looks really frothy here, especially with that pullback, so it's likely to take a breather. If you look at the weekly chart's super strong. There was a close last week above the green line. That's the 50-week moving average at 30 cents. You want to see that level turn into support. This week's candle is pushing above that upper Bollinger Band. It's hitting this resistance zone from back here in April, and so it needs to bust through this 70 to 80 resistance zone. If it can get above, then that 100-week moving average at 125 will be the next target. On a pullback, you want to see EMA4 at 41 and that 50-week moving average at 30 hold. So yeah, this has got a nice uptrend going here. It just needs to follow through and break through resistance. If you look at the SDRL 15-minute chart, you can see here it topped out. It had the climax spike, and then you can see you have the big volume early in the day, and then you have it failed to keep pushing higher. You can see it made a lower high, and then it started working its way back in. It got below EMA4 there. That signaled the chart was breaking down. Then here at 115, it got below the middle Bollinger Band, and then over here at 230, to 3, it failed to get back above that purple line. That failing to get back above that middle Bollinger Band currently at 61 was a red flag. That signaled that you wanted to be on the sidelines into the close to play it safe. Now going forward tomorrow, if it does get above 61, you want to see this 68 level break. That was the high close over here at 1015. If it can get above that level, then it could break out higher. The downside risk is it tests this green line. That's the 50 simple moving average at 54. If that fails to hold, you could see this gap filled between low of day today and high of day yesterday. A drop down to 51 would fill the gap. The next simple moving average support level below that is the 100 simple moving average at 44. Okay, let's take a look at CARV. All right, this was the big winner today, closed up nearly 200%, so congrats everybody. We did get alerts put out at this early in the day, and yeah, this was, alerts were put out earlier. It ended up being the big winner. You never know which ones they're just going to keep pushing higher, and so yeah, this happened to be the one today. And so it does have RSI at 95 and Fasto at 89, so it is frothy, and then you have the big spike here on plus DI, and so yeah, and after hours they pushed it higher. It closed here at $11 in the regular session, but after hours it's at $12, so we'll see if it can keep pushing higher. There is a gap between high of day yesterday and low of day today, so the downside risk is at some point they come down here and drop it below $3 to fill that gap. If you look over here, the average daily volume is super low for the stock, and then yesterday, I mean, there wasn't even much of a front load volume wise. It had that nice push above resistance, signaling that the chart was heating up, but the volume was still really light. So today, with being a thinly traded stock with big volume, at some point it's gonna pull back. All right, so look at MACD line. It's completely vertical here. So when you have this steep trajectory like this, this is almost completely perpendicular on both time frames. It's just unsustainable. It can't keep going at this trajectory, but it could push higher tomorrow, and so it is up after hours. I mean, these are just short-term trades. As you can see back here in October Yeah, this is the monthly chart. So back here in November, there was some volume. So it looks like, you know, they loaded earlier in 2017, but this is a thinly traded stock. I mean, as you can see, this is all this volume happened today, and so this was the largest volume day in years. So you have to take note when that happens. I mean, it has the momentum. It's busting through resistance. If it can get through this 2014 resistance zone here, it's at $12 right now. It's in the middle of it. What you're looking at is the high close here from February 2014. It's lined up with the gold line, which is the 100-week moving average at 481. That's the next big resistance level that I'm seeing on the chart. If it can bust through that 1481 level, then it could keep heading higher. If it stalls out at that zone, then that could signal a temporary top. This week's candle is busting through this upper Bollinger Band, which is down here at 740, and then you have EMA4 at 611. You know, it's breaking above the 50 simple moving average at 514. If it fails to break resistance, you could see it come down there and test those support levels. Okay, let's take a look at FCSC, another big winner today, closed up 60%. So congrats everybody. I know a lot of people are on this in the chat, so way to trade. It's RSI is at 83 and Fasto's at 97, so it's super frothy. And then once again, you have the perpendicular plus DI on 80X, which signals, you know, it's a very, very parabolic move, and it could push higher, but it's going to be short term. You know, it's not going to be able to sustain this for an extended period of time. At some point, it'll have to take a breather. It can't keep going straight up like that. And so right now, what's going on is it broke out above resistance. There was this channel here. You can see the lower Bollinger Band down here and the upper Bollinger Band right here, and it formed a sideways channel. They were really tight. Today you had a breakout above high close resistance above the top of the channel. It also got above February high close here at 70 cents, and then it actually got above this January 16th high close at 80 cents. It also got above the bottom of the gap level. You can see over here the 70 cents level is lined up with the bottom of the gap. There's a gap between high of day on this candle and low of day on this candle, and so today's candle busted through all the resistance levels and almost filled the gap. When it comes up here and hits $1, that gap will be filled. So tomorrow, this is the big level. Above $1 will signal upside potential, and then the target would be the 200-day simple moving average up here at 148. If it fails to break $1, then it could consolidate, and you're looking at the EMA4 at 75 is the key support level to hold. You know, we talked about that 70 level. It needs to stay above this 100-day simple moving average at 64. Okay, so yeah, so nice move. Take a look at EIGR, another big move. I mean, they're really running these penny stocks. It closed up nearly 42%. RSI is at 82, Fasto's at 94. You've got plus DI really pushing, and so you can see, you know, when it gets going, it pulls back, so you have to be on the lookout for it taking a pause. This stock is on a 5-day run, and it is pushing super hard here. It did close above key resistance, and it did fill the gap. There was a gap back here in January between low of day on this candle and high of day on this candle, and so today that gap did fill. It got above this line right here, and it also closed above high close horizontal resistance that's over here on the 16th, and so it closed above 16. It filled the gap. I mean, just a really monster move. And so going forward, what it needs to do is stay above 16. If it can stay above 16, it can keep pushing higher. If you see it drop below 16 tomorrow and then go below 15, that's going to be a red flag. It could stall out here since this was a temporary top back in you know, January after a big run, and so, you know, it could have trouble breaking this. You want to see it stay above 16. If it got below this 1525 level, started trading 15 and below, what it could do is work its way down to EMA4 at 1331. That is the downside risk because it's pushing so high above that upper Bollinger Band, and it is on a multi-day run. If you look over here on the EIGR weekly chart, you can see it had this gap down back here in 2015, and there was a downtrending channel, and so it broke above the channel back here in September of last year, and then it had been working on turning it into support, which it did. It ended up staying above that level. It didn't drop back in the previous channel. It was trying to get a new move going to the upside, and that's what it's doing now. It has this new uptrending channel. You know, you've got a nice breakout this week above resistance, and so the big thing this week is that break above the what is it, above the 100-week moving average, the 50-week moving average, and above the middle Bollinger Band, which is the 20-week moving average. The top one of those three moving averages is the gold line, which is the 100-week moving average at 1142. So you want to see a weekly close above that level, and then you also want to see a weekly close above this January high close, which is that 16 level that we just talked about. A weekly close above 16 would be really bullish because it could lead it back up into the 20s. You know, there's a lot of trading here in this channel between 16 and the mid 20s, and so that could prove to be resistance where it tops out. Because you can see this was big support, and then now it's hitting this level, which could turn into resistance. That's how it works. Support turns into resistance, and so yeah, you can see here it's hitting these levels that were prior support levels. So this could be a really tough level to break, but we'll see if it can keep pushing higher. You can see the top of this channel is leading to the up here in this mid 20s, and so yeah, and there is a huge volume spike this week. Okay, let's look at Chesapeake Energy. All right, so this is a weekly chart, and so I want to show you how it's breaking out above the 50-week moving average this week. That's this green line. Each candle represents a week of trading, and so this week, if it can close above that 50-week moving average at 384, that would be very bullish, and you'd be looking for a run up here to the 100-week moving average, which is the gold line, currently at 491. And so 491 is the target if it can stay above 383. If you look at the daily chart, it has a really nice move on the daily chart. You can see here it's been just going for multiple days in a row. So it's really pushing. And today it closed above that 300-day simple moving average. Notice how there's no upper wick on today's candle. It was extreme bullishness. So you've got Fasto maxed at 100 when that happens. This is super frothy. So just keep an eye on the 300-week moving average, the blue line there. Going forward, if it can stay above 417, that's going to signal upside potential. The risk is if it drops below 417, that'll be the sell signal, or at least lock-in gain signals for the short-term traders, because it could come down here and fill this gap. There's a small gap between high of day on that candle and low of day today. And so that would be downside risk, is that it would come down here to this 395 level and fill the gap. Okay, so it could do that and then still be bullish. What happens is once you get this was trading back here on the back here on the 3rd of this month. It was below all of the moving averages, EMA's 4, 8, and 13, and below the middle Bollinger Band and the 50-day simple moving average. And then on the 4th, it got above the 50-day simple moving average, and then it got above the 100-day simple moving average, and then above the 200, the red line, and then today above the 300. So now it's gone from in a straight shot from below the moving averages to all the way above the top moving average. This is, if there's going to be a sell zone, a level they take profits, this would be it. And so keep an eye on 417. If they do, then that's going to give you opportunity to possibly reload lower. And so the chart could still stay bullish and it could pull back. It's just once you get above that 300-day simple moving average, the candles need to stay above. If they fail to stay above, it signals downside risk. Now this has a lot of upside potential. You can see it is hitting prior resistance levels back here, and so you have high close right there where it's hitting from this closing price on this candle, and then just above you have high close here. That weekly chart looks sweet. It just can it bust out above the resistance here. You've got 442 right there. Those are going to be two big levels to break. Super strong move, just very, very parabolic. And then you have the big volume spike today. Sometimes that's when you have a multi-day run and then a giant volume spike. Many times that's the climax spike. So be on the lookout for it cooling down tomorrow. Okay, let's look at OPHC. This is kind of a random play, another one of those low volume type stocks, but it did have some volume today. So yeah, as you can see, it was the largest volume day since November of last year. So I'm showing you this chart. It had this symmetrical triangle pattern going. You have descending resistance. It had been working on trying to break the descending resistance line and ascending support. The candles are all at a flex point here, and it busted out to the upside. It did close above high close resistance here back in January, and so you want to see it stay above that level. And then the next key level is up here in the $8 range. This could possibly run up to 830 and retest that recent high. It has to stay above that 613, 615 level. It needs to be above $6. If you see it drop below $6, that would be a red flag, signaling it's not ready to go. If it can stay above 6 and push through 650, look for a possible run back up into the 8s. Okay, let's look at EGY. This is a weekly chart as well. This thing's been pushing. As you can see, it's up, what is that, 6 weeks in a row, and it's getting really vertical right now. It looks like it wants to push up to this 200-week moving average, currently at 216, and so that's going to be the next target. And notice that is lining up with resistance from back here in 2015. And so that's going to be the big level to break. So keep an eye on the 200-week moving average at 216. If it can, if it fails to break that level, that could signal a temporary top. As you can see here, look at this chart. It's just really pushing hard. You can see how it's gotten very parabolic. This has got an Eiffel Tower type looking pattern. It's unsustainable when you get these kind of moves. It can't keep going up in this type of trajectory. It's going to have to take a breather. You could see what happened last time it got going like this. You had multiple red candles in a row, but notice how it stays above EMAs 4 and 8 the whole time. As long as it's riding above the EMAs 4 and 8, it doesn't drop below the lime and green line. I mean, the signal is that you can keep riding. Once they let it close below, then it could consolidate. So if you don't mind holding when it works its way back to see if it holds support, the longer term signal is that this up gap between high of day on this candle and low of day on this candle, and so you could get a drop down here to 25, and it could drop down here to 25 and fill the gap, and so that would be the downside risk, and so. Yeah, so we'll keep an eye on it. It's pushing really hard. Okay, take a look at CEI. All right, this closed up nearly 20% today. This is when we've been, in a chat play from yesterday. So congrats, everybody. I put out alerts on this that it was heating up, and then it did follow through today. It closed at 46. It's above 30, above 50. So the chart's heating up. You have that crossover there on ADX, and then it needs to get above minus DI. What we were looking for yesterday on the stock and why it got on our radar was it was testing EMAs 4 and 8, that line and pink line, but it did pull back and not close above. Today it finally closed above that level for the first time since back here. And so it actually also closed above the orange line, which is the EMA 13 at 44. And so you have to go way back here to this candle back in March to find the last time, the very first day of March, that it closed above EMA 13. So when that happens and it's on a volume spike, that's your clue that the dead cat bounce play, might get a reversal going. So tomorrow, keep an eye on it for a break above 48. That's the middle Bollinger Band. As you can see here, when it tried to get above, it failed the last time in April. And so it's all about getting above that level. And so if it does get above that level and it can close above, what we look for is a run up to that 50-day simple moving average at 67. It's lined up with that upper Bollinger Band. That could signal a possible top if it got, going. Keep an eye on it. It's got volume. It disappoints all the time. It did have the P-star bull flip, the green dots. Flip below the candles today, so it's another signal the chart's heating up. If it dropped below 42, that's the stop loss level. You don't want to hold if it closes below 42. If you set a stop at 42, the market makers could stop you out and take the share price higher. Penny stock traders like to use a mental stop loss, and then it's just all about the close. It has to close above EMA 4 to remain in play. Keep in mind that those kind of dead cat bounce, super dilution, downtrend type of charts are the riskiest charts to trade. Okay, let's look at WRN. Okay, so this is Western Copper Gold. So this had a big volume spike today. Check out the volume here, and it did push through the 100-day simple moving average, currently at 87. That's the gold line right here, at 87, 86. And so if it can stay above that level, what you're looking for is a run up to this 200-day simple moving average at 99. The dollar level, just above that, is the 300-day simple moving average at 103. So this was a super strong move, big spike. If it does pull back and it stays above that 100-day simple moving average, above that 87, 88 level, then that should signal that this uptrend's intact and that it wants to push higher. It hadn't closed above that 100 day simple moving average since back here in 2017 before it dropped below. You can see here when it had traded below before and it got above, it did make a nice run. So it has that nice look here, like it wants to get something going, wants to get a reversal going. So keep an eye on it. You've got this. Let's see here. So yeah, it's trying to break out, and so yeah, we'll see. Look at the volume too. So this was the largest volume day since way back here, and you have to go back into 2017. When it was really bullish back in 2016 and 2017. That was the last time you saw this kind of volume. And notice how it's at the bottom here, trying to break above resistance. And so you never know. It could follow through and get something going here. Okay, now let's look at, let me see something. All right, my battery was getting low there. Sorry about that. Okay, now let's look at LKM. So yeah, this was the dead cat bounce play. We were talking about this in the chat today. It had that big volume spike yesterday with the long lower wick, so you could tell people were loading. And then today it had the bounce. What's going on is the candles are trying to work their way back into the bands. And so yeah, unfortunately, yeah, there were some problems with stock charts. So I'm using this trading view, and I don't have the Bollinger Bands on this one. It's all about EMA4 right here, and so the candles are working their way up to this pink line. That's going to be the big level to break. Keep in mind it's coming down fast. A lot of times when you get a dead cat bounce play like this, they come up and they hit EMA4 and the downtrend continues, similar to how it's been riding EMA4 here. So it's always the lock-in gain zone if resistance fails to break. That's at 105. Okay, let's look here at ENSV. This is a big breakout play. This thing has been really cooking. Okay, it has a nice uptrend going. It's on a 3-day run right now, and it broke out higher. Yeah, it's got just a good strong chart since back there in May or March of 2017 when it bottomed, and it just keeps pushing higher. And so yeah, if you look at the weekly chart here. Let's see. So you can see on the weekly chart that it's breaking out above that 300-week moving average. Last week it broke above the red line, which is the 200-week moving average. It had the first close above that level since way back here in 2015. And so, and you can see back here in 2015, when it dropped below that red line, that's when it really fell off a cliff, and when it got below the blue line. And so now you have the inverse of that. You have it breaking above the red line and above the blue line. So if back here, when it broke below those levels, that signaled a much further move to the downside, breaking above those levels is now signaling a move to the upside. And so as long as they hold, the uptrend is intact, and it signals to keep riding. So this is still a super strong chart. It's all about staying above 115. If you can get a weekly close above 115, and it stays above that level, then the weekly chart is signaling to keep riding. You can see it's been holding EMAs 4, 8, and 13. I mean, as long as they're holding, the signal is to just keep riding. This is a good, strong uptrend. Okay, let's look here at CPSH. All right, so this stock has a nice volume spike today. It did make a long upper wick on today's candle, and so that is a red flag. They were locking in some gains here off of high of day, and so it did close though above the gold line, which is the 100-day simple moving average. It's currently basically now it's above all the moving averages that we chart, and so if it can stay above that 151 level, it could head higher, possibly retest up here at $2. This high close at 203 is going to be the big level to break, and then right here at 188. So, but currently it has to get above resistance just right above, which is right here at that 169 level. So yeah, if it can get above 169, then you could see it possibly retrace back up to $2. If it fails to break that level, it's just going to be all about holding that 100-day simple moving average at 152. Okay, let's look at CTIC. Okay, so this stock is breaking out higher. It did close up 11% today. You have RSI at 80, Fasto at 96. Nice breakout here above resistance, and so that EMA4 at 432 level is going to be the key level to hold if the candles do work back into the bands. But what you want to see now is it start riding EMA4 support higher and just cruising along the upper Bollinger Band, kind of like back here in January. That would be your most bullish scenario for the bulls. It did push hard above that level, so if it works in, you want to see that 432 level hold. If you look here at the CTIC weekly chart, you can see it turned that 100-week moving average into support at 375, and it's pushing higher. If it can break above this 480, this 480s level, this seems to be a big resistance level. Then you have this, around 515 or so, and then up here at just above 560. It's all about this 2016 November to January of 2017 resistance zone. That's going to be the next key level to break through. It does have a really good uptrend going. As long as EMA4 supports holding like this, and the candles are pushing higher, the signal is to keep riding. Okay, because it has a good uptrend. It's trading above the moving averages. It's working its way higher. Okay, let's look here at one more. This is EVEPQ. Okay, so this stock did trade on the big boards, and it got demoted down there, delisted to the over the counter, and so yeah, now it's an over the counter stock, and let's see here. So basically, what's going on with this stock is it did have a nice day today. It did close up 77%. This is an old chart. This is the last chart that last time I analyzed this. And so you can see that there was this gap down, and then it just traded lower. This is probably when it got delisted, and then they drove it down. I don't know the whole scenario on the delisting, but and then basically here, yeah, and then you have the Q. So what, they filed for bankruptcy. So yeah, this is just one heck of a risky play. Bankruptcy, delisting, not a good one. But if you're a trader, you know how people are. If it gets above the middle Bollinger Band at 12 cents, then that 50-day simple moving average at 18 will be the next target. Some people like these plays. You know what I mean? You just have to be quick on the draw. You don't want to get caught holding the bag. If it fails to get above that middle Bollinger Band, that's going to signal more downside risk. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. All right, thank you.